even through this, what we call crypto winter, the brands are still interested in this because they're thinking, okay, what this allows me to do, in addition to turning it to a tangible on the balance sheet, it allows me to have customer loyalty in a way that the alignment of incentives makes it a very powerful network effect, because your customers, by owning digital assets from your ecosystem, will appreciate in time, or they can accumulate more of them by being good community members, are now passionate behind your brands, much like kids trade Nike sneakers. So they're thinking, okay, this is going to make people more loyal, and we'll have a direct relationship with our community or buyers by doing this, and therefore we can collapse the costs of using middlemen like Google and Facebook, etc., at the middle too. So it's very powerful.
Despite the present crypto cold, Raoul Pal observed that institutions are still quite interested in Bitcoin. This is significant for a number of reasons, including the growing exposure of large institutions to Bitcoin and other cryptocurrencies. First, institutions are given access to a new asset class through cryptocurrencies, which can help them diversify their holdings and possibly increase profits. Secondly, by being exposed to cryptocurrencies, institutions may stay on the cutting edge of technical advancements and potentially take advantage of new opportunities. Blockchain technology, on which cryptocurrencies are built, has the potential to alter a variety of industries. Third, access to cryptocurrencies can open up new markets and client bases for businesses, especially in places where traditional financial services can be unavailable or restricted. Fourth, by decreasing transaction costs, boosting transaction speed, and enhancing security, cryptocurrencies may be able to increase institutional operations efficiency. The desire for institutions to offer Bitcoin services is rising as cryptocurrencies gain popularity. Institutions are able to accommodate this need and perhaps even draw in new clients by being exposed to cryptocurrencies. In general, exposure to Bitcoin and other cryptocurrencies can benefit large organizations in a variety of ways, from diversity and innovation to access to new markets and increased efficiency. Institutions that are not exposed to cryptocurrencies may miss out on these possible benefits as the Bitcoin industry develops and matures. Raoul Pal recently discussed his most recent Bitcoin and cryptocurrency-related theory in a new interview. Please hit the like and subscribe buttons if you haven't already before we start listening to him. Thank you so much for viewing our videos.
To understand this, I've been involved in this market since 2013 when I first saw Bitcoin. I wrote the first ever macroeconomic strategy paper and valuation for Bitcoin. So I've been all over this space. And the one thing when I wrote that first article is you need a 10-year time horizon. Everything else is done. And if you are worried about these cycles, you are trading it wrong. You're trading and not investing in the adoption of a network. Right. So how does crypto work? Crypto is driven by two things. It's really simple. Network adoption, which is Metcalfe's law. So that's the number of active users plus basically the number of connections or applications for those users. That is what drives the long-term trend. The log trend of Bitcoin over time is the best performing asset of all recorded history, and it remains so in every single up business cycle. There is no asset that's ever performed as well. But it is cyclical, driven by the money supply and the liquidity cycle.
And the emotions.
And that's what brings it down 70 or 80%. So everyone goes, what? It comes down 70, 80%. You've got to remember that if I'm just looking at the Bitcoin chart now, the low in 2015 was $200. Right. Then it went all the way up to $20,000, and then it corrected down to $2,800. All the lows are massively higher, and the highs are massively higher.
Yeah.
So if you just step back and say, oh, I bought crypto and it fell, hold it. Your time horizon cannot be 3 years. Your time horizon needs to be long enough for the network adoption model to work. And the best way of doing that is just using a log chart and looking at it within that, and it's a very smooth uptrend. Right. And then what you do is you learn to use the down cycle, the liquidity cycle, to add to your investment over time, much like you would have done with Amazon, or you would have done with Google, or you would have done with Microsoft. They're very similar models. Don't forget, Amazon back in 2001-2 fell 96%.
Oh, I've already.
I don't think Bitcoin will be a payment system except using the Lightning layer for moving dollars around. It's fine if you're PayPal and you're in the monetary system because you give people a different product to use, but nobody wants to be the Bitcoin pizza guy and buy, a couple of books on Amazon for Bitcoin and then realize because the Bitcoin goes up too much over
It's too
time.
volatile.
So
Yeah.
it's too volatile to do that with. So I know it seems fancy. There is a Bitcoin and ETH economy, and you can get a share of that economy, and that economy can do very well. So, we take payments in ETH or Bitcoin or whatever at Real Vision. That's fine. Some people want to do that because they've accumulated a lot of capital in those particular assets. But generally speaking, it's a bit of a red herring, I think, for that. Ethereum itself is becoming the payment system of the internet. It's very interesting because it is a base currency of which we quote things like NFTs in ETH itself. I've never seen that in my life. So my big thesis on crypto is I've started two companies. One is Exponential Asset Management. That's for investors to invest in digital asset hedge funds and other vehicles to get exposure to the space. So the financialization of the crypto markets, whether it's family offices, high net worth investors, pension funds, sovereign wealth funds, all of that. Science Magic Studios was the other side of that equation, which is I look at a lot of Web3 and it's being built from the grounds up, and they're all experiments. Some will fail, some will work. Great. But when I look at what Web3 does, it enables a bunch of really, really big intangibles on a balance sheet. Culture, brand, community, to become tangibles via tokenization. So I always use the example of Disney. Disney probably has the largest cultural brand on earth now. It might have been Coca-Cola in the 60s, but it's not now. It's Disney. What is Disney's brand, community, and culture worth? $1 trillion? $2 trillion? It's worth a lot more than the company is. Now, it's not realizable, but when you tokenize it, it creates that. Science Magic Studios' mission is to tokenize culture, these large cultural communities. Music, right? Music's one of the biggest cultural phenomena of human activity. Sports, gigantic. Fashion, gigantic. And then on top of that, entertainment, whether it's film franchises, book, TV, all of these things have cultural currency that can be tokenized. So the idea of that, we built an amazing team with some incredible advisors to go and talk the talk that needs to happen at boardrooms, not by a bunch of crypto heads with hoodies, but serious people to go in there and explain how we can unlock massive trapped value for these massive communities and drive forward this whole space.
The following are some possible advantages for institutions using Bitcoin and other cryptocurrencies. First, Bitcoin transactions may be completed between parties directly, cutting out the need for middlemen like banks or payment processors, resulting in transaction fees that are considerably cheaper than with other forms of payment. Security should be tightened up. Second, the difficulty of hacking or otherwise interfering with Bitcoin transactions, which are protected by cryptographic methods, can lower the risk of fraud and improve the security of institutional transactions. Third, quicker settlement timeframes compared to conventional banking transactions, which typically take several days to complete. Bitcoin transactions can be processed considerably more quickly. This might make it possible for institutions to handle transactions more rapidly and effectively. Make things more transparent. Number 4. Transactions on a public ledger are recorded as a result of the decentralized nature of the Bitcoin network, enhancing institutional transactions transparency and accountability. Access to new markets is position 5. Particularly in places where traditional financial services could be scarce or inaccessible, institutions might use Bitcoin and other cryptocurrencies to gain access to new markets and clients. Diversification is the 6th step. Institutions may have an opportunity to diversify their portfolios and maybe increase profits by investing in Bitcoin and other cryptocurrencies. What do you think of the video we just saw? In the comments area, kindly let us know. Regarding the types of programming you would want to see on this channel, we would also value your feedback. Thank you so much for watching.